Good afternoon everyone, and welcome to today's Lunch and Learn tax series. Today we're going to focus on R&D tax credits with a specific focus on revenue audits and interventions and how to best prepare for these. We will also look at the future of the tax credit with one eye on the current Department of Finance public consultation into the tax credit, which will close at the end of May. By way of introduction, my name is Damien Flanagan and I'm a tax partner in KPMG. I specialise in the area of incentives, namely R&D tax credits, R&D grants, knowledge development box and capital allowances. And I've been doing this for over 15 years now at this stage. I'm joined today by my colleagues Emma Fitchin-Kavanagh and James Dalton. Emma is a chartered accountant and is also tax qualified. Emma also has specialised in the area of R&D tax credits for over 15 years now, and she is one of Ireland's most experienced R&D tax credit professionals. James is a PhD scientist and completed his PhD in microbiology, and he also has a master's in biotechnology. James ran a research lab in Auckland for 5 years before joining KPMG in 2016. Emma and James are going to walk you through the key revenue focus points from a tax and science perspective. These are the things that you need to know when filing your R&D tax credit claims. So moving on, and to get us started, I would like to do a little bit of scene setting before handing over to Emma and James. As you know, accountants like stats, so the first one I'm going to share with you today is related to the cost of the R&D tax credit. What you can see on the screen in front of you is a chart looking at the cost of the tax credit since the inception in 2004. You can see that there's been quite a dramatic ramp up over time, and then we had a little bit of a decline around 2017, 2018, but we're now on the way back up again. The current cost of the tax credit is about 630 million, with approximately 1,600 companies claiming the tax credit at the moment. The last year we have stats for is 2019. We expect the 2020 information to be published relatively soon. This chart shows the breakdown of the R&D tax credit claims by size of company based on the number of employees. What you can see on the left-hand side of the chart is that companies that employ less than 10 people, they are responsible for about 1/3 of the total claims filed, but yet they only account for 5% of the quantum of tax credits claimed. So no surprise that small companies claim less. On the right-hand side of the page, you'll see that companies that employ more than 250 people account for 11% of the claims filed, but 72% of the quantum. Again, no surprise that large companies claim the most tax credit. This chart looks at the breakdown of the R&D tax credit by sector. Now, we don't have information into what exactly each sector means, but manufacturing, which accounts for more than half of the tax credits and almost 500 claims, within manufacturing you would find most of life sciences. So any life science company that is manufacturing and doing R&D work in Ireland would be in that left-hand column. Life science companies, as you know, are capital intensive. They spend a lot on materials and they have a lot of highly paid employees. So it's not a surprise that they account for the lion's share of R&D claims. The largest sector by number of claims is ICT, and this tallies with what we see in our own business. Moving further to the right, wholesale and retail is a little bit surprising, as is admin and business support. As I said, we're not sure exactly what is in these categories, but an interesting chart all the same. This chart shows the breakdown of the R&D tax credit by size of claim. Down at the bottom of the chart in the green, you can see that there's about 1,250 companies, or approximately 80% of the companies, that claim less than 200k of tax credit per annum. So that means if you're claiming more than 200k per annum, you're in the top 20% of claimants. And if you claim more than 500k of tax credit per annum, you're in the top 10% of claimants. That might surprise many of you. I know it does surprise my clients when I tell them often that they're in the top 20 or top 10%. The final slide that I look at before handing over to Emma is looking at revenue stats on interventions and reclaims. Now, unfortunately, we don't have any recent information, but what we do have here shows us the interventions and the reclaims up to 2016. You can see that in 2016 there were 276 revenue interventions. Now, this could be an inquiry, a full audit, an aspect query letter, but it's some sort of inquiry from revenue. And these 276 interventions yielded 13.7 million of money paid back into the exchequer from 100 companies. This information gives revenue confidence, I suppose, that looking at R&D tax credits will yield something for them. So it's why we have seen a lot of R&D tax credit audits over the years. We had a little bit of a quiet time during the COVID pandemic, but we are expecting that to ramp up over the next while. And indeed, Revenue have said publicly that now that they have resources back from COVID supports, that they are going to refocus on R&D tax credits. So with this in mind, I'm going to pass over to Emma, and Emma is going to talk to you about the tax and finance elements that you need to be aware of from an R&D tax credit perspective. Emma.
Thank you, Damien. So I'm going to talk to you about the finance and tax aspects of R&D tax credit claims, and of course it's intertwined with preparing for an audit of your R&D tax credit claim as well. As Damien mentioned, in terms of settlements that arise from revenue audits, a key aspect of the settlements in terms of the feedback that we get from the revenue commissioners is a lot of settlement comes from the tax and finance aspect, so it's something that's particularly important to pay attention to. There's several points that you need to consider when you're preparing a claim. The first is whether you're actually entitled to claim the credit in the first instance, and the key point around this is whether you're a qualified company. A qualified company is one that is either a trading entity or a 51% subsidiary of a trading entity. You need to be carrying out the R&D activities, and you need to be keeping a record of the expenditure that you incur on those R&D activities. Typically we would see companies claiming on an individual company basis. We'd also see companies claiming on a group basis, but predominantly be the company itself. The other key issue is whether you can draw a clear nexus, a relationship between the expenditure that you're incurring and the actual R&D activities that have been ongoing during the period. It's important to understand, what are the right types of expenditure to be including, have you treated them appropriately, and can you support those? And above all, on all positions that you take, can you substantiate them with artifact evidence? If I would say one thing to bear in mind, throughout every type of expenditure you're considering for an R&D tax credit claim, it's the extract from the legislation that talks about expenditure being allowable. Expenditure has to be incurred by the company itself, wholly and exclusively in the carrying on by it, and by it is commonly taken as by its employees, in the carrying on of R&D activities. And what that tends to translate to is you need to focus on the expenditure that is actually incurred in the doing of the R&D. When we look at the types of expenditure that are eligible for the R&D tax credit, we're looking at things like the fully loaded staffing costs for the individual employees that are involved in the R&D. These would typically be technical staff, so engineers, scientists, software developers, software engineers that are involved in doing the R&D in a given year. We'd also see materials, consumables, for example, say the inputs that go into the production of engineering batches or demo batches in a biotech entity. Overheads are also permissible. However, the type of overheads that you can claim for has been restricted considerably over the past number of years. So we typically see companies claiming for things like power, utilities, consumables for the R&D. Rent is a type of overhead that has evolved over the last number of years. For the first 16 years of the R&D tax credit, if you were renting a space to do your R&D activity, you could claim for a portion of that rental expenditure. However, in the latest iterations of the revenue guidelines, the position has altered, and revenues appear now only to be willing to accept rent that relates to a space that in itself is integral to the R&D activity. For example, a clean room, a sound lab, a specialised laboratory. And they're unwilling to accept a space that is more akin to just the setting in which the R&D takes place, for example, an office, a manufacturing facility. Plant and machinery is also an important type of expenditure. For example, if we have a biotech company who's involved in developing a scale-up of a new biopharmaceutical product, there would be a lot of investment in the plant and equipment to get that process up and running. However, that would have a dual use. So it is important to carefully apportion the expenditure to R&D activities and to non-R&D activities. In addition, for companies that are engaged in manufacturing type activities, claiming a tax credit on the building where the R&D is taking place can be a very important thing to take a look at too. There's a lot of criteria that need to be met. However, the key is that for the first 4 years of the use of the building, you're using it at least 35% for R&D activities, that you're claiming industrial buildings allowances on it, and that you keep a record of the R&D that you do in that space. In addition to those types of expenditure where the entity has incurred the expenditure itself on it doing the R&D, there's also provision to allow an element of subcontracted R&D. So you can outsource R&D to unconnected third parties that are doing R&D activities on your behalf. It's limited to the greater of €100,000 as long as you're spending that money and it's matched by in-house expenditure, or 15% of your in-house R&D activity. The key for this is a recent update in the guidelines to the point in time at which you have to notify those third parties of your intention to claim a tax credit for the money that you've paid them to do the R&D. Up until a couple of years ago, the requirement was just to send a notification and no time limit was given. However, it's important now that notifications are sent either in advance of or at the time that you make the payment to the third party. It's important to bear in mind as well that any expenditure that's already been met by the state by way of grant, for example, IDA or DNI grant, or from Enterprise Ireland, has to be deducted from your R&D tax credit claim. So it's possible to claim a tax credit for grant-aided projects. The important thing is that you take away the amount of grant that relates to those R&D activities from your R&D tax credit claim.
Good point, Emma. Thanks for that. I suppose, look, there's a lot in what Emma has said, but in some ways, whether we agree or disagree with the revenue, we do have a good sense of what they will allow or disallow. So it is somewhat easy to stay on the right side of what the revenue will allow from an expenditure perspective, whether you agree or disagree. So just bear that in mind when you're filing your tax credit claims. We can go one way or the other, but there is a line that is quite clear, and we can help you make sure you stay on the right side of that. I'm going to pass over to James now, and James is going to talk to us about the science test and the key things from a science perspective that you need to bear in mind when filing your R&D tax credit claims. I suppose one thing to say is the science test is more subjective than the finance test, as James will explain. James.
Thanks very much, Damien. So I'm going to talk us through the science test and the key criteria by which revenue judge the qualifying nature of your project. As Damien said, there's a lot of subjectivity to this. At first glance, it seems relatively straightforward, but there's a lot of nuance behind it. What I will say before we get into the details of the test, that it's essential that you do this prior to making a claim, and definitely ahead of any audit situation. You should review the test in depth before making the claim. It should be done by a technical person within your team, and best practice might be to have someone independent, either from within the company or from without, to take a review of the activities as well. So let's quickly run through the 5 key criteria. So these are defined in the legislation. You'll also see them in revenues guidelines. The first point is that the work has to be systematic, investigative or experimental. The second point is that the work needs to be in an approved field of science or technology. Thirdly, the activity needs to be one or more of the following: basic research, applied research or experimental development. Fourth, the work has to involve the resolution of scientific or technological uncertainty. And finally, fifth, the activity needs to seek to achieve a technological advancement. So as I said, they appear relatively straightforward at first glance, but let's delve into a bit of the nuance behind each of these. So in terms of systematic, investigative or experimental events, it's expected that these activities follow a planned logical sequence and generally to a recognised methodology. And planned is the key bit here. This isn't about making a serendipitous discovery and back engineering a claim into it. You need to have planned to investigate this activity, and the documentation behind that is going to be very important, and that's a point we'll touch on shortly. And when we talk about planned activities following a logical sequence of events, essentially we're talking about the scientific method or the engineering method, in that we see a gap in the knowledge, we define a hypothesis of what we want to investigate, we design experiments around that hypothesis, we make observations, we do analysis, and we draw a conclusion. Or in terms of the engineering method, we see an unmet user need, we prototype, we test that prototype, and maybe we go through rounds of iteration and prototyping until we get to a solution that solves the problem that we're looking at. Essentially, when you talk about systematic activities, you're talking about the how, the what, the why questions around scientific and technological problems. If you have a how, a what, or a why question, and there's a doubt about how to solve that question, then you move forward into your prototyping or hypothesis phase, and then into your R&D project. The second point is that the work must be within an approved field of science or technology, and you'll find these listed in the appendices of Revenue's recent guidelines. Again, this can seem relatively straightforward, and it is if your project is within one discipline. Challenges can arise when your project spans multiple disciplines, but it's important that you define your project as accurately as possible, because it allows Revenue to appoint an expert that will understand your project. If you appoint an expert from maybe a related field but not the exact field, it can lead to challenges in them seeing the value of the work that you do. Equally, we've seen an increase in projects that span diverse disciplines, and this can also bring challenges. So it's very important that you think clearly about what field of science or technology your project is in.
James, just before you move on, it is worth saying that the revenue list of sciences and technologies hasn't been updated since 2004. So if you're working in machine learning or artificial intelligence, you won't actually see those listed in the current field of sciences and technologies from the revenue guidelines. So it's something that we're asking to be updated just to reflect new technologies that we're working on today.
Thanks, Damien. That's a great point. The activity must be one or more of the following: basic research, applied research, or experimental development. The vast majority of R&D projects we see claimed in Ireland are in the experimental development stage. We don't tend to see basic research projects. They tend to be under the remit of universities in Ireland, but we do start to see projects in the applied research space, and they tend to be spin-out companies coming out of universities, taking that basic research and giving it a commercial slant. So in terms of experimental development, this is work which is undertaken which draws on scientific or technical knowledge or practical experience for the purposes of achieving a technological advancement, which we'll touch on in a minute. And this is directed at producing new or improving existing products, materials, devices, processes, services. And a key thing here is it also includes incremental improvements there too. So it's not about completely redefining the space, it's about those small steps that we take to gradually improve our processes. One question that we get a lot of is, what separates R&D versus non-R&D? We've talked there about experimental development, but what separates that from routine development? And essentially the key point is the generation of new knowledge or new capability or technological advancement. Where we produce a new or improved product and we generate new knowledge, that's likely to be in the experimental development stage. Where we don't produce new knowledge, but we do produce a new product, there's no technological advance, and that's more routine development. It might be innovative, but if no new knowledge is coming from it, it will be seen as routine. So with routine development, you tend to see maybe highly technical activities, but they're predictable, they follow a predictable path, there's no surprises, and no new knowledge is generated from them. One of the key points in the 5 key criteria is technological uncertainty. So the project must involve the resolution of a scientific or technological uncertainty. And this is an uncertainty, this might occur when knowledge of whether something is scientifically or technologically possible or how to achieve it in practice is not publicly available or deducible to a competent professional working in the field. What is a competent professional working in the field? Well, there's no definition of that, but what we tend to say is we look at people's education experience and their background. Ideally, we're looking for someone to have a relevant degree in the specified area that you're looking to achieve an advancement in, and we'd like to see a broad range of experience within that field also. So, if the uncertainty is in a field of chemistry, typically we like to see someone with a chemistry degree or PhD, and they've been working in that field of science for a number of years. One of the key things to remember when trying to identify your technological uncertainties is look at the constraints you're working under. That might mean that a process that you previously had existing knowledge of goes back into an R&D phase because you're now working under a new constraint. You might have an existing commercial process that you want to improve the yield on, look at the sustainability impacts of, reduce energy requirements, and that brings you back into an R&D phase because you want to change your process in some way. You have a new constraint. That means that the established knowledge can't answer the questions that you're currently facing. The 5th point is that you have to seek to achieve scientific or technological advancement. And a key word here is seek to achieve. You don't have to achieve it, but you do have to have your experiment set up in such a way that you could achieve it. And this test relates to the knowledge or capability in the field of science or technology that you're working in. It's about this test relates to the knowledge or capability readily available to the company or to a competent professional. This isn't about the new product that you make, this is about the knowledge you need to develop to make that new product. One of the key things when talking about a technological advancement is you have to have a good understanding of the baseline knowledge that was available to you at the outset of the project. And this is a key area that we see a lot of companies when they put together their R&D reports. It's an area that they haven't invested as much time in as they potentially should. So you need to examine what's out there in the public sphere. You need to look at the scientific literature. What are your competitors doing? What do you know internally from your own company or your own subsidiaries? This forms the baseline of knowledge for you to then add new knowledge to. It helps revenue see as well where the advancement is, so it makes their job easier to judge the good work that you're doing and recognise the advancements that you're making. So once you set your baseline knowledge, you conduct your investigation and you add new knowledge to what's available, and that's where your advancement lies. There are a number of additional requirements that we see from revenue guidelines and from good practice in general. It's really useful if you can have technological or scientific objectives that are measurable within your project. That helps judge how the project is moving. As I've mentioned, the state of the art or the knowledge base is really useful to demonstrate where those advancements lie. And finally, it's incredibly useful to have evidence of all these activities. And that brings us on to our documentation point. So Emma talked us through the accounting test, and we've just gone through the science test. You need to document both elements. You'll find that some documentation is specific to the accounting test and some is specific to the science test, but generally there's an overlap. Revenue may seek to deny a claim if it's unsupportable. Revenue places a really strong focus on the availability of sufficient, relevant, contemporaneous documentation. You could have the best project in the world, but if you can't back it up with documentation, it might as well not exist to revenue. So in terms of documentation around the accounting test, this is to ensure that the expenditure claimed as being incurred on qualifying R&D activities is being correctly claimed. The type of documentation that might feed into that is documentation that contains project commencement termination dates, project plans, Gantt charts, including milestones and deliverables, and then reports that track progress against those deliverables and milestones. In terms of personnel, details of their qualifications, and what's really important is details of their time allocations. The location of the R&D activities is really useful, and associated costs with that, so light, heat, and other associated costs. In terms of any third parties you interact with, details of payments to universities or details of payments to non-academic subcontractors. And what's really important as well is the method or basis of apportionments you've made to all your elements of R&D expenditure. This applies to people, to materials, to plant and machinery. We could have situations where you're working in an area that has mixed use between R&D and commercial, and it's really important that we get good separation between the two, that we understand why the apportionments are made and what the logic is behind them, and that we can clearly explain that to revenue, and we have that documentation in place.
James, I think that the point that you've raised is so important for everybody to be aware of. We often think about and talk about the accounting test and the science test as these two sort of separate entities, but this is really where you can see sort of the nexus between the two of them. And it's, when you look at the accounting test and you think about, what staffing costs are eligible, you look at the people, you look at the costs. But in effect, that doesn't really mean a whole bunch until you understand, from a science test perspective, are they doing the work that involves the resolution of the technological uncertainty? And then when you look at the evidence, can we support that? Like, can we show that these are the activities that these people are working on and the resolution of uncertainty continued throughout that? So it's the layering of the requirements, I think, to your point about can we understand what revenue you're looking for from an accounting perspective? It's sort of the layering of those requirements that really comes to the fore when we talk about documentation.
I think that's a great point, and you talk about the accounting test overlapping with the science test. When we look at what the revenue guidelines set out as documentation required to satisfy the accounting test, it talks about project plans and milestones, but they're science documents, so that overlap, as you say, it really is there, and you do need to look at both tests side by side.
Yeah, and I think that sort of the best claims that we tend to see is where within a company people are speaking to each other. Departments that maybe previously wouldn't necessarily have known what each other are doing, sort of there's an onus to sit down and have those discussions, about, well, these are the project plans, these are the people, this is the work that's done. How do we meld all of this together to make sort of a coherent case that we can stand over?
Thanks, everyone. I think those are really great points. And as we talk through the documentation around the science test, you really see that overlap. I think one of the best types of evidence is one that marries both those elements. Like, as I said, there's documents that relate specific to the accounting test and there's documents that relate to the science test, but it's the documentation that marries the two together that's probably the strongest in an audit situation. We talked about the first criteria of activities being systematic, investigative or experimental, and being following a planned logical sequence, but they're the same documents we're looking for in terms of the accounting test. the Gantt charts, the initiation documents, the planning. And then as we get into the experimental work, we're looking at documents around the activities that took place. We're looking at what specific activities took place, who did them, and again that really relates to the allocation that you're giving around the staff that do the work, and relate to the allocations around the machinery and the buildings that we're using. The types of place you might find this documentation, it varies from industry to industry. If you work in a highly regulated industry such as pharmaceuticals or medical devices, you're inundated with all sorts of documentation. And this can actually be a challenge in terms of an audit situation, because you have almost too much documentation to review. So it's really useful if you have less regulated documentation, things like slide decks where you present your work, summary of your work every few months. This is really useful to have just to get you up to speed ahead of an audit. In terms of industries that are less heavily documented, this can become a bit of a challenge. I think it's one of the key things to remember. If you're going to claim the R&D tax credit, realise that you have to document your work. And in places where you're less highly documented, there are other types of documentation. There's things like JIRA tickets in the IT field, and various other types of documentation.
James, just on that, just to add, I mean, the difference between different industries is something that we see all the time, and it does cause difficulties under audit, because sometimes revenue approach it as one size fits all. And the revenue guidelines, it does say that there's an appreciation that different industries have different documentation requirements, but what we see in the field is that the companies that aren't required to keep formal documentation are the ones that will typically struggle more under audit, and they would be claims in the ICT space, frankly. So if you are making claims in that space, you really do need to consider what documentation you have and whether that's enough, and whether you actually do need to go above and beyond what you'd normally do to create new documentation before you commence the R&D activities.
I think that's a great point, Damien. And again, in terms of talking documentation, we couldn't talk documentation without talking timesheets, essentially. And this, again, is one of those documents that can touch on both elements of the test. Timesheets aren't covered under the legislation, but for revenue, they're a gold standard. And whether timesheets are daily, weekly, monthly, it's really useful within an audit situation to have these, especially if they're countersigned. And what can be gold standard within an audit is if your timesheets also contain a narrative that relates to the work undertaken. But obviously a lot of companies, some don't maintain timesheets, some only maintain timesheets for certain staff. So what happens if you don't have timesheets? But there's lots of other places we can get this information, maybe not as ideal as having timesheets, but we can look at things like your calendar to see, are you attending meetings relating to the projects? We can look at emails to see how you're interacting with other people within the company and make estimates of time based on this, and that can also apply to external companies you're working with. If you have quality systems monitoring your documentation, we can see when you access the system, what documents you're accessing. If you're working in the IT space and you're operating on sprints, take pictures of whiteboards, look at personal notebooks, anything and everything that gives revenue an idea of the amount of time and effort you're putting into resolving these questions can be used as evidence. I guess just to close off in this section, there's a few things that are best practice around documentation. The main thing is that everyone involved in the process, whether they're on the finance side or the technical side, understand what the qualifying R&D activities are, what expenses are eligible, and the requirements around documentation. So it's not something that you're kind of scrambling to do when you're about to make a claim or when you're under audit, that it's baked in from the start, that people know what documentation is needed and the expectations around it. Document as much as is feasible. We appreciate people have day jobs to do and you can't document every single element of a project, but try to do as much as is feasible. It's really important that you organise the evidence so it's readily accessible, and that you retain the evidence in a suitable location. So once you make a claim, revenue have 4 years from the date of that claim is being made to audit it. Typically you're making the claim a year to a year and a half after the work is done. So you're looking at a 5-year window there that revenue could look at your claim. So imagine the difficulty of trying to defend a project that's 5 years old at this stage, and then bear in mind that you're going to have staff changes both on your finance and technical side. So try to design your documentation and the storage of your documentation with the idea in mind that it's going to be a completely new technical and new finance person defending your claim, just to make your audit defence as robust as possible.
And the storage of documentation, James, I mean, what we have seen happen in the past is that companies have documentation retention policies that within 12 months, 24 months, documents are deleted after a certain date. So you do need to be mindful that if you are making an R&D claim, you may need to keep that evidence for up to 5 years, so you need to make alternative arrangements so that documentation isn't wiped.
You kind of bake it into your processes. Like we've seen companies that would have had maybe task tracking systems, time tracking systems, they decide they're going to change business-wide to a different type of system and all the data is lost. So, you maybe build it into kind of business decisions. Is there sort of a protective measure we need to take if we're going to change a system? Are we going to lose evidence?
Yeah, those are really good points. And I've seen that in practicality in some of my interactions with companies where they had an email retention policy of emails being deleted after 2 years, and no one within the company knew that was the case, or people involved in the R&D tax credit. So I'd ask them, what evidence do you have? And they're like, well, we've got emails showing our interactions internally, we've got emails showing our interactions with our third parties, and when we looked at it further, their email policy had everything deleted after 2 years, so they had to instigate a policy of retention of emails specifically around those people involved in those projects for up to 5 years. So in summary, the best time to think about documentation is at the outset of the project. Make sure you have sufficient systems in place to capture all the documentation that you need to defend your claim successfully under audit. And with that in mind, we're going to hand over to Emma, who's going to talk us through some of the audit process. Emma.
I think it's very important to understand what the process is sort of once you've filed your claim, and to be aware of particularly the structure of an audit and what it involves. So typically what we have seen heretofore under the pre-May 2022 Code of Practice is that companies would tend to get what's known as an aspect query letter. The aspect query letter would ask somewhere between sort of 17 and 23 questions, digging into aspects of the accounting test, the science test for a given R&D tax credit claim. And under that query letter, you would have an opportunity to give a full, robust sort of outline of your claim. Typically, you would send your report. It would outline the specifics of the projects, the summary of the expenditure. But importantly, at that stage, you would have an opportunity, if you needed to do so, to make an unprompted qualifying disclosure. What we're seeing now with the new Code of Practice, and again, we haven't seen any letters come in yet from Revenue under the new regime, is that there's a possibility that the aspect query letter, which is very helpful, would be done away with, and instead we may move straight to what is level 2 risk review, at which stage the ability to give an unprompted qualifying disclosure is no longer available. An aspect query letter, we find, has been a very useful mechanism whereby a company gives a sort of full account of the eligibility of their R&D activities, and if it's taken seriously, we tend to see there would be a reduction in the level of inquiries then that would transition into a full audit. We are seeing an uptick in inquiries, we are seeing an uptick in aspect query letters and in audits that have commenced, and we understand from Revenue that we expect to see an uptick in audits generally in the R&D tax credit space. So what does an audit involve? As you've heard today, we have the two tests, the accounting test, the science test, and then effectively the third piece that spans both, which is the documentation element. An audit is designed to assess both of those tests and the evidence that exists to support them. Typically what would happen is a company would get a notification that Revenue intend to commence an audit into their claim, and that they would be given 21 days notice before the audit would begin. In a lot of cases, we would see that Revenue would appoint what's known as a technical expert or an independent reviewer to look at the eligibility of the activities to assess the claim under the science test, and to understand whether the costs that have been claimed for those activities seem reasonable. What Revenue would tend to do is to give details of the person they intend to appoint and the information that they intend to disclose to that person, which is typically the report that's been provided. You have an opportunity within 30 days to respond to revenue and say whether you feel the individual that they suggested is potentially not suitable for the audit, or whether there may be a competitive issue, and whether you agree to the provision of that information. Once an audit has commenced, then typically what we would see is that the revenue inspectors would assess the costs that have been included in the claim and the documentation that exists to support those costs, and the technical expert would be tasked with reviewing the activities. Usually that would involve an initial assessment of the paper-based information that you've given, and then an interview with the technical leads of the projects. The important thing to be aware of is that the onus is on the company to present the best case. It's your opportunity to demonstrate how you believe that your activities qualify and how you believe that you have sufficient evidence. It's important not to expect to sort of sit back and not be prepared and to have sort of questions put to you and the onus to be on revenue. So everything that Damien's spoken about, that James has spoken about being prepared and doing it right from the beginning is so important when you understand the sort of test that would be in place towards the end. When the technical expert has finished his review, his or her job is to prepare a report detailing per project that they've reviewed, whether they believe they're qualifying, and if they believe they're not qualifying, outlining the basis for that. You then have an opportunity to review it and to rebut it if you do not agree with any of the findings. Typically we would find that, humans being humans, it's much better to put a best foot forward and present the strongest case you can from the get-go, rather than trying to sort of argue with a decision that has been made by one of the technical experts. We then, as we progress through the audit, get to a stage where we need to agree a conclusion. We've certainly seen cases where companies may not agree with the findings of the expert, and generally they have an opportunity to represent the projects and to perhaps give detail that had not initially been provided, with a view to trying to get the expert to understand the eligibility of the work. So, as you can see, every element of the accounting test, every element of the science test and the documentation, every piece that you put effort into sort of constructing up to prepare your claim, revenue can tend to sort of deconstruct it into its pieces to assess whether the claim is eligible. So, as James has said, and we can't say it enough times, really the key is being as prepared as you can be from when you first prepare your claim, and even if it's possible from when you first start to undertake your R&D activities. I think it's worthwhile just kind of understanding sort of some of the practical difficulties with R&D audits as well, and these are the things that we tend to see sort of time and time again. One of the first is that, particularly in a hot labour market, the R&D personnel that were present at the time and doing the R&D and keeping the documentation are no longer available. And I think this issue is particularly acute in the ICT sector, where we see quite a high turnover of people. And it also overlaps in that sector with a tendency to not need documentation for sort of regulatory reasons. So I think, if you find yourself in that industry, if you find yourself in a situation where documentation tends not to be required, I think to what Damien said earlier, try to think, can you bake in processes to try and capture information and to centralise it somewhere that sort of protects it from, people leaving and walking out the door with that corporate memory. We often see as well people sort of move within the business. They might move to another geographical location, they might move to another sort of role within the business that means they're not called on typically to support a claim, but in those situations you might want to consider seeing if they can come back to support an audit. We also see situations particularly around documentation, retention policies, so just to kind of replay that, it's so important to kind of bake into your decision making, if you're planning to change a software system that captures the time, the activities, the work that's being done, get an export of that data, make sure that you have something that keeps it for at least sort of 4 to 5 years after you've done the work.
Thanks, Emma. As I mentioned at the start today, the Department of Finance have launched a consultation into the future of the R&D tax credit. This consultation, it's part of a series of consultations. It's actually the 4th consultation that the Department of Finance have done over the last 12 years. They typically do it on a 3-year rolling basis. The consultation opened in mid-April and is going to run until the end of May. And the Department of Finance have set out a questionnaire that they're asking all stakeholders to complete, companies claiming the credit in particular, So I guess anyone that's sitting into this webinar today obviously has an interest in the R&D tax credit, and I would encourage you to log on to the Department of Finance website or contact us and ask us about the consultation. I really think it is important for people to have their say, because the R&D tax credit is being framed now for the future. And as the Department of Finance say themselves, that the purpose of the consultation is to consider the challenges that firms are facing who are active in the R&D space, but particularly in the context of international tax reform. So contact us or log on to the Department of Finance website and do check out the consultation. Back in October 2021, when Ireland signed up to the OECD International Tax Reform, both Minister Donoghue and Minister Varadkar on the same day, the 7th of October, they both outlined the importance of the R&D tax credit to Ireland, and they both spoke about the R&D tax credit continuing within the international tax reform space. What we're going to see when tax rates are uniform across the OECD is that there's going to be a much increased competitiveness when it comes to R&D incentives and indeed other kind of incentives. And this feeds into the Department of Finance consultation as well. Back in July 2021, KPMG submitted something into the Commission of Taxation and Welfare. We put in a pretty hefty report, and we set out what we would like to see on a number of different tax heads, but we did include a number of items in relation to the R&D tax credit. And this is all about ensuring that Ireland remains competitive, that Ireland is seen as a hub for R&D activity, and that international companies continue to invest into Ireland. The main things that we called for in that submission, the first one was around ensuring that the tax credit is protected and will still be attractive post-international tax reform. So that talks to items like making the tax credit fully refundable as a first option, or fully offsettable directly against payroll taxes. The second thing that we felt would be helpful is if the tax credit was increased to 30%. It did start off at 20% back in 2004. It was increased to 25%, I'm going to say in around 2008. But an increase to 30% I think would really set Ireland up as a competitive jurisdiction for R&D. Green technology is obviously very topical and is very important to the climate change agenda. We feel that incentivising companies to undertake more R&D activities in the green space is something that as a country we should look at. And that would involve, for example, increasing the R&D tax credit rate to 50% for companies that are active in green technologies, whatever that might be. It could be wind, it could be hydro, it could be wave energy, it could be biomass, it could be reduction in plastics. Whatever area of green technology you're involved in, encouraging more of that into Ireland, I think will be very important for our future. Expanding the range of costs that are eligible for the R&D tax credit, I think, would certainly set Ireland up well for the future. We have had a significant narrowing of the cost base from the inception of the R&D tax credit in 2004 to where it is today. And I think moving back towards where we were in 2004, which was allowing costs that are incurred for the purposes of R&D activity to qualify. At the moment, the wording in the legislation talks about costs incurred in the carrying on of R&D, and this is often an area of argument and debate when it comes to revenue audit. So I think a general acceptance that costs incurred for the purposes of doing R&D activity, it would align it more to what we see in grants, IDA or Enterprise Ireland grants, and would make it easier for companies to understand what eligible costs actually are. I mentioned earlier that the list of sciences and technologies hasn't been updated since 2004, and albeit that doesn't preclude companies from claiming the tax credit, because areas such as artificial intelligence and machine learning, they are included within that field of sciences and technologies as computer science and other allied fields. So it is within the allied fields, but I think calling them out specifically, it would give additional comfort and certainty to companies that are working in this space that those new technologies are indeed eligible for the tax credit. Just to look at SMEs, we did hope that we would have a 30% tax credit at this point for SMEs, but that was turned down as a result of state aid competition rules. But there are other things that we can do for SMEs, and I suppose just two ideas that I think are well worth looking at are ensuring that the cash refund, rather than being repayable over a 3-year period, is repaid upfront in year one. That would be a significant cash flow boost for SMEs, and indeed it could be open to all companies. And the final thing that I would ask to look at for SMEs, or ask to look at for all, but would have a benefit for SMEs, is increasing the cap on outsourced R&D activity. That does have a more restrictive basis for SMEs given their overall level of expenditure. So that's all we're going to cover today. I'd like to thank Emma and James for their contributions. The chat function has been open and we've had people firing the questions in, and indeed we got questions in advance of today as well. So I'm going to just run through some of the questions, and I'll bring in Emma and James as appropriate. So first question I have in, I might put it to you, James. It asks, do Revenue recommend a specific format or template for R&D reports?
Yeah, that's a great question. In Revenue's most recent guidance, they do have a suggested file layout which goes through all the questions that they typically would ask, and it seems to be laid out in a format which makes it easily auditable for Revenue. And what I would say is this is a suggested file layout. It mightn't tell your R&D story the way you want it to be told. And as we've discussed, the science test is the key thing here. If you don't pass the science test, you don't get to move on to the accounting test. So while they have a suggested file layout, possibly tell the story as best suit your project.
And I think just to add to that, there are a total of 37 questions or sub-questions within that file layout, and some of those won't be relevant to your organisation. So you might look at it and think, gosh, I can't answer all those questions. Like, there is no requirement to answer all the questions. Second question in, and Emma, you did deal with it, I suppose, but you might just elaborate a little bit. Have we seen an increase in revenue audit interventions with respect to R&D and indeed KDB claims recently?
Yes, since the beginning of this year, I think we've seen an uptick in aspect query letters, in audits as well, and I think that kind of syncs with what we understand from what Revenue are telling us, with a lull during sort of the COVID pandemic when resources were put elsewhere, that we should expect to see an increase.
I might take the next one. It is asking, is the R&D tax credit at risk as a result of the consultation? I think the answer is no. If I take you back to what Leo Varadkar and Minister Donoghue said when they were talking about international tax reform, they were all very positive on the tax credit, and it was part of the negotiations with the OECD that R&D incentives would continue. We are starting the consultation, and we won't see the output of that probably until after the summer, but we do know that the Department of Finance are positive on the R&D tax credit. We do know that previous reviews and consultations of the R&D tax credit have shown that it is fit for purpose, that it's best in class, and all those kind of buzzwords. So I think there's room for improvement in the tax credit, and my hope would be that the consultation will see further improvements in this year's budget and finance bill. Next question in, and maybe one for you, James. Is there a specific industry that is considered more at risk when compared to others, pharma versus computer science, for example?
I guess we've touched on elements of this already. As to who Revenue will send out an aspect query letter to, I'd imagine they'd be sending them out across the board, but it's that transition through to the audit stage. So we talked about the documentation requirements, and some industries having more documentation due to being regulated, and maybe they don't progress through to the audit stage as frequently as, say, ICT companies that maybe don't have that documentation. And the other side of that is they have staff who are used to writing technical reports, so are maybe better at getting their point across in a succinct manner where it's easy for Revenue to see the value of what they do. So they work in an industry with more documentation and have people that are used to writing documents, so maybe they don't progress as frequently. So we generally see more ICT companies in the audit space.
And I'll just stick with you, James, then. There's a question about how the appointment of experts and how that audit works whenever we're in COVID times. Are these things done virtually or on site?
Again, that's an interesting one. Kind of pre-COVID, you'd expect someone to come on site. With COVID, things were done virtually. It probably helps that they can come back on site now, because if you have an R&D facility, they're getting to come in see the effort involved, see the equipment that's in place, see the building, see the amount of effort that goes into it, and it just puts a good setting to the activities that take place.
I might take this one. It asks, why is the approach from government with respect to providing R&D grant supports so different from tax-based incentives? IDA are very constructive and work with us, whereas revenue adopt a different approach. I suppose the IDA and the revenue are very different beasts. They do very different things. The IDA is all about incentivizing companies to bring jobs into Ireland, right? So they will work with you. They want to give you the grants. They want to see the jobs, in Ireland and companies growing. And not that the revenue don't, but the revenue's job is to protect the exchequer base. So I don't think it's fair to say that revenue set out to deny tax credit claims. But they have a duty to review what you're claiming. They have a duty to the taxpayer to ensure that what's been claimed is fair and above board. And I think there was a period of time when the guidelines changed quite significantly, and the quantum of claims and what you could claim reduced, and we saw a lot of audit activity and audit settlements during those times when I suppose the playing field was being agreed. But as I said earlier, knowing where that line in the sand is we're all a lot more familiar with that. So I don't think it's a question of fairness necessarily. It's just a question of what they do and what they're asked to do. Looking through, Emma, maybe a question for you, and it's maybe similar to the last question a little bit, but the revenue guidelines seem to restrict our ability to claim any R&D overheads except electricity. Yet, our accounting treatment allows us to include all appropriate R&D related overheads. Is that correct? Yeah.
Unfortunately, over the last number of years, there's been a real narrowing in the types of overheads that you can claim, which is unfortunate because all of those costs are properly incurred in doing the R&D, and often wouldn't be incurred unless you're doing the R&D in a particular space. But best practice really is to restrict your overheads to utilities and consumables for the R&D.
And I think the accounting treatment, the accounting definitions of R&D are a lot broader than the tax definitions of R&D, and that's just a matter of fact. So final question, Emma, maybe to you. It's asking about the revenue code of practice, and I know we touched on that earlier, but are we going to see an increase in penalties, particularly given the subjective nature of the science test?
We would hope not. I think it depends. When we talk about penalties, it depends, what you're making a settlement on. So if the settlement is, on the basis of a subjective reading of what the legislation requires, then we would be in the realm of technical adjustment where no penalty would apply. And, frequently where we see that occurring is, the company believes that a particular project meets the requirements of the science test, has clearly demonstrated that in their minds, but in the mind of the technical expert, he or she doesn't feel that that's, the case. So it's, doctors differ and patients suffer, but, in that case, we would hope there would be no penalties applying.
That's all the questions that we have time for today. So I'd like to thank everyone for joining. I'd like to thank Emma and James for contributing today. Hopefully you all learned something. Hopefully you've all got a better sense of what's involved in making an R&D tax credit claim, what's involved in defending an R&D tax credit claim. If anyone has any questions, contact myself, Emma or James or any other member of your KPMG team. If you want to get involved in the consultation, again, you can do that yourself directly, or we're more than happy to chat to you. So we'll leave it at that, and thanks everyone for joining.